Now, Cameron Peacock joins us from IG in Melbourne. Cameron, good to see you there this Tuesday. It's a busy day ahead, of course a busy week too. Firstly, what's your call for the Oz Market Open?
Yeah, good morning, Bridie. Look, with US markets now closing at 8 a.m. Australian Eastern Standard Time, we've just seen the US markets matching out. They had been fairly flat for most of the session, really just oscillating around the flat line. In the end, I think the Dow eked out something like a 20-point gain, the S&P up about 2 points. Yesterday, of course, in our market, we managed to rally about 0.3%, shrugging off that negative finish on Wall Street on Friday night. But we do like giving back a couple of points on the open today. At this stage, we are calling the market down about 5 points or 0.1% around that 44.69 level, but I do expect it to be a very subdued trading day. I mean, Melbourne's a bit of a ghost town at the moment. I was driving in this morning, got in a record amount of time. We had a lot of people off yesterday as well, so I think most people's focus today, certainly in Melbourne, is the Melbourne Cup with, again, people on holidays. The one bit of economic data which people will be watching out for today, of course, is the RBA cash rate decision at 2:30, which you've just been speaking about. And then, of course, you've got the big global event being the US presidential elections, which kick off in the US tomorrow. So I think investors today are going to be very subdued. One eye on the US elections, one eye on the Melbourne Cup, and some passing interest on the RBA's decision at 2:30.
Just on that US election, if we could start with that, and I wanted to ask you, I mean, I saw a note from Dow Jones Newswire saying that, look, the US election is going to be positive for stocks. Whoever wins, they historically gain US stocks after close presidential races. What do you think of that idea?
Yeah, look, I think the one thing that I've heard a lot of people talking about, and I buy into this argument as well, is that you want to see a clear and unqualified winner. You don't want a situation, and the markets globally don't want a situation like we had back in 2000 with Bush and Al Gore, where it was several months of recounting and court challenges before Bush was awarded the victory. The markets certainly don't want to see a repeat of that, where that creates uncertainty. I think most people seem to think, regardless of whether Romney wins or Obama wins, what they want to see is Washington starting to work again and starting to bring fiscal and monetary policy closer together in terms of their working relationship. Really, for the last 18 months, Washington has been broken. There hasn't been any sort of fiscal developments or progress made. It's all been left to Ben Bernanke and the Fed. Of course, this election has some big implications on the fiscal cliff negotiations, which will follow immediately after this election, and that's why I think a lot of people are really just sort of sitting on the fence at the moment, not making any investment decisions, because depending on who wins this, that's going to shape the fiscal cliff negotiations heading into the end of the year.
Got to ask you about the RBA decision today. It was interesting, we were speaking to James White from Colonial First State a little earlier on First Business, and he was thinking that, if the RBA doesn't cut today, you could see the Aussie dollar jump by 2 US cents. I mean, what do you think of that, and what do you think the RBA might do today?
Look, I've got no idea what the RBA is going to do today. I agree with what Bill Evans just said on that little package you ran before I came on, that, why wait? If they're going to cut, they may as well cut now and not in December. My personal view is that the RBA should cut today. I would cut by 25 basis points to 3%, and then basically strongly worded in the statement to say that's it. 3% does represent the lows of the GFC, and I don't think anyone can argue that we're in a worse position now than we were at the GFC. So I think 3% is probably the floor in rates. I don't really think they need to go any lower than that, because I have seen some people suggesting the rates will get down to 2.25% and 2.5%. I think that's ridiculous, because it doesn't actually factor into what the implications would be on the housing market. We've already started to see housing prices starting to rise, investment loans starting to go up. I think the last thing the RBA wants to do is create a bubble in the housing market. So I think 3% is probably a natural floor. I would cut today by 25 basis points to 3%. That way you give retailers and you give consumers a little bit of a boost before Christmas. And then if you come out strongly and say that's it, I think that sort of eliminates or gets rid of this ridiculous guessing game that economists and bankers seem to play month on month as to what the rate situation will be. If the RBA comes out firmly and says 3% is the floor, unless we get another sort of financial crisis, people can move forward knowing with some certainty what monetary policy is going to be for the next 6 to 9 months.
Cameron, really appreciate your analysis. Thanks so much for your time. We are going to